I'd like to welcome everybody to another Friday live stream, locked and loaded. No doubt about it. Great to see everybody. Give it a couple seconds here. Let some folks in that want to partake in the message tonight. Try to keep it around 60 minutes. It's the fastest 60 minutes on YouTube. No doubt about it. A lot to unpack. Coming out, I could see this probably come and go as soon as possible. That would be nice. January has just been an absolute disaster. Haven't paid much attention to it. Be honest with you guys, I've been indisposed in a lot of different projects. Really kind of give you a nugget within the first minute of the live stream. It's going to be incumbent upon your ability to put the stock market in a box. Don't let it consume you. It's just that simple. It's not worth it. Lots of schools of thought have transpired over the last 10 years, especially during this bull market, which has made people think that perhaps maybe working hard is not necessary. Making money is easy. Um, you know, Taking shortcuts is the way for all to get ahead and retire at 30. I don't share in that. I don't. I do share a testimonial of someone who believes that a multifaceted approach and one that requires diligence over the long term is really the key to ensuring that the masses can enjoy success. Um, I find it interesting. I've said for the last 3 months and had some of the larger YouTube channels talking about them selling their entire portfolio. Interesting enough, I felt like we've been in kind of correction mode for the last three, even before Christmas, back into November of 2021. It's been correcting. I think tech has really exacerbated the sell-off. And I think usually when people start to take note, we're a couple months into a correction. Just that simple. So if your game is going to be timing the market, and you'll lose, you'll effing lose. Um, I guess the real fallacy nowadays is that there can be hundreds of thousands of subscribers that want to tune into that garbage and watch somebody fart in a cup and sell them on the idea that that is something that they need to do as well. And perhaps I'm wrong. Perhaps there's hundreds of thousands of people who can actually have a brain on their own shoulders and make decisions on their own and not always turn to YouTube to tell them when to take a shit, when to breathe, when to have their beat, when to feel, when to laugh, when to cry, when to do anything, how to think. Tune into YouTube, write it into the search bar. How is it that I can think on my own? Help me. This channel takes a completely different approach to and often scoffs at social media for the damage that it causes. I think the institutions really don't have to do a whole lot. Retail investing community is like a hand grenade, ready to blow themselves up at any time anyway. We are our own worst enemy. And I think there's a lot in the retail investing community that deserve this staunch lesson that they're getting on the stock market and what it can what it can dole out. I will say this: there's been some pretty good accelerated sell-offs during this January drawdown in the markets, which I think will provide those opportunities quicker. So it's just going to be incumbent upon you guys to actually, meet Kevin Cuff. I see that. um, I think these folks are probably great people, and I don't mean to. I do mean to pick a little bit of fun. I don't care what they do. Talking about a strategy in the market that is wrong is going to hurt a lot of people. And it's just amazing to me how many people want to follow. It's just that simple. We may have to pull out the sheep intro tonight to prove my point, but it's amazing to me how the lack of people out there kind of foot stomping. And, Chris with Strongman Personal Finance, he does a good job of really kind of foot stomping the same message over and over and over again about the total world market and just owning the ETFs and living to fight another day. But this whole idea that you can just, buy and sell and get in and out of the market. I mean, they missed today. They missed today, up of 600. And that's what happens. Is it a dead cat bounce? I believe that it probably is. That there's been no reason over the last 3 weeks to expect that this isn't going to continue to accelerate to the downside. Um, but who cares? I just, if you could just pay attention to the landscape enough, if you're that interested in paying attention to what everybody else has to say, do it, and then do the opposite. Just do the complete opposite. Seriously. I'm neutral, whatever you want to say. I'm boring. I'm long-winded. Um, but there are certain strategies that I share, and I'm very, very careful before I share them, that can work for the masses. It's just that simple. And the sooner you guys can look at your opportunity in life more holistically, the better off that you'll be. In other words, if you're that 20-year-old out there and you're looking for that message of get rich overnight, and you're looking for it on my channel, you're sorely mistaken. It's not one of those things that I advocate for. And these larger channels, man, that are putting this information that is contrary to the greater good, either number one, they are naive to proper stock market application, or number two, they just don't give a shit. They just don't give a shit. And there's hundreds of thousands of people who must not realize that. In other words, they don't have to be involved in financial markets. They don't. A significant amount of their net worth has come from their business. And this transcends YouTube or people who are successful in business, and then try to assimilate that success or a financial wealth with wealth garnered in the stock market. Wealth garnered in the stock market is a hard-earned dollar. You have to pay attention. You have to apply strategy, and you have to stick to that strategy and plan. It is not something that happens every single day. You're going to go through periods where it just seems like you have no idea why you're doing what it is that you're doing. But when you start to earmark points in your life where you just take a pause and you step back and say, man alive, there was a decision at some point in my life when I started investing in the market. Has it put me in a better place now than I would have been had it not been for the assistance of financial markets? And I tell you what, guys, it's so interesting. I typically, as a self-assessor, am always looking at the mistakes that I've made as opposed to the successes that I've made. And I look back over my investing career, and I might be in what could be perceived to be one of the biggest mistakes of my life. And I share that with a social media audience, and people come on and they're like, Ryan, you're wrong. You're 100% wrong on this deal. You're going to lose everything. I had one gentleman come on, I think, or a lady, I can't remember, tell me that the basement in their house is free when I end up losing everything with Hyliion. I thought that was kind of funny. We will do the reviews in the portfolio tonight. We will assess, and you guys can assess for yourself whether or not somebody who has built, and I will stress and foot stomp the importance of looking at financial security as being just that. It is a wealth building evolution. It's something that takes time. It takes effort. Everybody has time, and everybody can put forward the effort. I question people's motivation to do that. Acknowledge the time, but also put forth the ample effort that is needed to get somewhere in financial markets. And it is just amazing to me how people always look to take the path of least resistance. And on the independent investor channel, if I can't put you in charge, I don't want you around. I don't. I'll give you everything I've got with regard to how I deploy my program. I'll give you all the tools. I'll give you some things to think about. Take those fundamentals, but you've got to apply it yourself. In other words, if you think by nature of me doing all the work for myself and putting myself on a path to financial freedom for myself and my family, that you're going to carbon copy, not do any work, or make this make sense for yourself and make it reality for you just by sheer nature of coming in and visiting the channel, it's just not going to happen for you. And I'm slowly learning as I get older the minority of people out there that are willing to put forward the work. And I'm disappointed, and I do advocate for those people out there maybe that can make their way to my message and feel inspired to take those first steps. Never too late. I don't care what your age is. There's folks in my group that are in their late teens, and there's folks in my group in their 60s, 70s, and 80s. So there is no disparity. There is no amount of credit that you need to have, or criteria that needs to be met. None of that stuff exists. Financial markets exist. You define the level of capacity of your entry. It's just that simple, and it's quite fun. It really is. Participating in financial markets is fun. It starts to become a little less fun and much more rewarding, both, when you start to embark on a little bit more of an advanced program that I run in way of my speculative category and my hyper growth that's just getting absolutely crushed right now. Some stocks that I was looking at, interested in taking positions in, Matterport comes to mind, that I don't own, and SoFi on the other end that I do own, that I've put a little bit back to work now. But man, they are just rolling off, and they're rolling off tough. They really are. So this has been kind of a double whammy. No problem. I deploy strategic buckets, and I'm going to show you the mixed bag tonight. As we started to kind of level off, it was a nice give back today. It was a nice $7,500 day for me. So we were able to make up some of the damage. But when you guys are looking to assess over a January that's been just downright brutal, we say it how it is. We come into the Independent Investor Channel live stream. We don't beat around the bush. Do we sell everything? No. The people who have been with me for years, they know that there's only one application. You might be tempted. And there's probably people who even follow me and know 100% what my conviction is going to be from week to week to week, from year to year to year, to hold the market strong. And there's going to be people, mark my word, that cannot handle the swings, even as acute as this January has been able to dole out, and they've sold. They've lost that conviction, and they've sold only to feel better for a short amount of time. Now, is the market going to continue down? I don't know. Those are not the types of questions that you really need to be asking. What I can say is, down 10%, I was actually tempted to do a little buying. So when you're doing your damage assessment of yourself and what has been, what has transpired over the last month in way of potential slight first tier entry back into the market, down 10%. What I mean by that is, if the market rolls off 10%, look to deploy a little bit of capital. Look to deploy nothing, no problem. Look to deploy a little bit of capital in the markets, no problem. Okay. If it rolls off another 20%, then we look to step that up and deploy some more capital. I was going to deploy a little bit today, and got my first green day in a long, long time. Decided not to deploy, as well as I didn't have a lot of the time as today to actually step in. But I was looking at buying a little bit of the passive market today. The contributions to the Roth IRA have been completed for 2022, so $12,000 to each, $6,000 to one, $6,000 to the other. That's done for 2022. I usually do that in January, but those dollars are in there. I have not invested yet, and I have not made my first investment in 2022 outside just a few shares of the VIG, a little bit of a top up in SoFi. I did buy some more long contracts in some interesting categories, actually. Nikola, I went ahead and bought some long call contracts in Nikola. I went ahead and bought some long call contracts in Hyliion. I just think that the progress there in the space in general has been dismal. but there has been some marked interest in the space as we look to step into integrating some of these green solutions into heavy transportation. And I find it interesting of a way to just go ahead and say, look, in 2024, if I can't have Hyliion at $7, I think I wrote the contracts for, maybe even $5, I can't really remember. And then nickel, I believe I wrote the contract at $10. If it's not above $10 in 2 years, no problem. That's a bet I will take all day. And it's been proven to actually be really quite an interesting pick here as they're looking to push out their product, becoming eligible for the 125,000 of credits. That's really getting a lot of attention, especially in the port of LA. So some interesting stuff, and it's a space that fascinates me. Very interested in the space itself, and really interested in collectively. I mean, I'm just a little fart in the wind, you know. I mean, what influence do I have as far as environmental stewardship and taking a step in the right direction? I know how much of a personal steward I am of the environment, but I think it is important for some of these major industries to atone for what has transpired over the last, let's say, 100+ years of running transport and building quite a significant amount of profit over those years. I think the time is now, and I think there's a difference. I think we're at the very beginnings of a paradigm shift in the industry, where I think you've got a lot of the transport companies out there that are excited about the prospects of integrating some of this technology into their fleets, and it's going to be a fun thing for me to actually evolve with and observe as we step into the next 10 or 20 years of integrating the fleet. So I'd like to welcome everybody. I really appreciate you guys being with me on the Friday live stream. Let the folks, we've got a great group in here. We'll do portfolio reviews. I'll get to some questions tonight. I've got some topics to talk about, some of the things to think about as we enter into February. I still have high prospects for 2022. Come December, I'll let you know how it works out. But for the most part, man, always be an optimist. There's no reason to live your life in the dumps, and this too shall pass. And we look to exploit those pockets of value that are always created on these sell-offs. They always create them, and they create them fast. So you really have to be kind of aware that while everybody else is crying about the market going down, and that nobody told them that that's what they signed up for, while you are coiled up ready to strike at that next opportunity, guys. So stay with me. Be back with you in just a moment. That was devoted to all the audiences of the large YouTube channels. I've been part of that. I've watched Meet Kevin before. I don't watch him anymore. I don't. It seems to me to be a self-fulfilling prophecy, and it's moved a lot further away from my mission and perspective on the Independent Investor channel. I don't want this project to stand for that. If this project takes 10 or 20 years to build out, I'll look to move into retirement with this project as part of my life. And I want people, for the most part, on a topic like this, that is one of the top 5 topics that people don't like to talk about, actually looking at this opportunity and saying, you know what, it impacted me. It made me think about a few things. It put me in a position to question my own motives and my own strategies, and it really kind of put me in the driver's seat. And that's what I want to do, is make people think about the importance of understanding why it is they do what they do. But it's always interest of me when I look at some of these folks who are almost looking at the stock market as something that can be controlled or timed or predicted. And Guys, I'm going to give you my best. Hell, I could be wrong on this too, but here's my best summary of 25 years in the stock market. You will never ever be able to predict the stock market in the short, medium, and long term. There will be people that throw out educated guesses, and lo and behold, they're right. It doesn't make them smart. It makes them lucky. It sure does. And I don't care if it's with individual stock. I don't care if it's with the direction of the stock market. I really think the takeaway for a lot of investors out there that may be looking to get involved with markets in the first place is to ask yourself a very simple question. And I pose it in this way all the time. Do you want to invest in the market or not? If you do left, you know, it's like Mr. Miyagi. Yes, you invest yes, or you invest no. You walk middle, you get squished like grape, right? Don't be wishy-washy about this application, and especially don't want to check out your validation on YouTube as far as what these YouTubers are doing from week to week. Hell, you can throw me into that category, no problem. The last thing I want to do is push some information out there that somebody acts upon, and they maybe misconstrue it, or they hear me outright, and they deploy that information, and it hurts them. I can deal with personal losses. There's no problem about that, because I know how to weather storms and I know how to take stock into deep water. But the last thing I want to do is get somebody turned off of stock market investing, when I think even for the lowliest investor out there, i.e., one that doesn't have any confidence that they can make it, but with a little bit of perseverance and that right pedigree of desire to do, can actually get ahead. If they do desire to do that, they really can, and we can provide that motivation. So I was thinking about dollar cost averaging, but it looks better to start a position. I think 10% down, you could start a position with no problem. If you're going to start a position, okay, X being that value, $1,000, 2,500, 5,000, larger chunks of capital, anything above maybe, five figures, 10, 25,000. Yeah, I may be a little bit more strategic with deployment to those funds. And then it kind of comes down to individuals' uh, specific situations with regard to, have they, maxed out their tax advantaged accounts? How does the savings account shape up? Is there some emergency cash there on the side? How is your spending discipline? I can go on and on and on with regard to that, but I dollar cost average the market all the time. There is no stopping and starting of that. So that is an all the time exercise that I do in the market. I don't stop. I'm funding the market to the tune of about, I think on the conservative side, I would say about $1,500 a month. And 1,000 of that is 20% of my pay that goes through the thrift savings plan. So for all you guys that are government workers, to understand that that's a big chunk of that. Now the remaining 500 will go toward $50 a week, $100 a month, and dollar cost average. I do some strategic buys. I would have done that now. I would have funded up the passive account, which is just fabulous. I want to foot stomp that for you guys as we go over the portfolio reviews. But yeah, I mean, if you've watched this market just linger at all-time highs for, since the pandemic low of March of 2020, now you're kind of getting a potential opening to buy some stock at lower prices, especially on the passive side. And definitely on the technology side, I think you can grab the triple Qs. What I was going to buy today is Matt's favorite. Matt Money is one to discuss a product that I really like it, and it's TQQQ. It's a tough one. It's not for the faint of heart. It is good for me in the strategic location, and I was one day removed of buying TQQQ today, this morning. It would have been a nice entry at $50. Would have been a real nice entry. And it ran up. It ran up $4, $4 and change today. I do own the triple Qs and the Roth, so it's a little safer. But the TQQQ could fit nicely in my brokerage account to supplement the total market, which is Vanguard's VTI, domestic total stock market, not not the global markets VT. Okay, but I thought that was a good supplementary holding to that anyway. So let's jump into the portfolios, man. We'll take a look-see and see how things shook out. Making sure that I don't need to move in. That was a nice offer about the basement. I said, can you accommodate 4? Okay, got to have a little fun on this deal, guys. You really do. So here's the brokerage account, marginally down week over week. This is down about $1,000, I think, week over week. So starting to level out, starting to get a little bit of footing here, perhaps. Boeing and 3M really rolled off. So value rolled off, and tech caught some heat here. Whether or not that is sustainable, I have no idea. I really don't. But Amazon here on an entry is nice. I like Amazon. I like picking up. Google's had some nice price action through the volatility here. CRM, which is Salesforce.com, that had a nice day today as well. So here we are in the brokerage house. This is a taxable account for you guys that are seeing this for the first time. This is Roth IRA number 1. I do have 10% of this in cash. I'm holding strong there on this. Chevron, Disney, Hyliion in this. I was able to, some of the folks have asked me about my tax loss sale that I took in December of last year. That 30-day wash is gone now, which is great. I've supplemented some of those shares back into the Roth. At the time of liquidating those 4,000 shares, I had 12,000. I'm back up to 11,100 shares anyway. So, and I was able to put some of those shares long into the Roth IRA anyway. So good stuff. Microsoft action has been fantastic. Small caps have been absolutely obliterated. So VBK, you're going to see some damage there. SoFi is extremely suffering right now. Realty Income had a great day today. TAC Global, it can't get out of its own way. I think since I bought it, it's gone down every day. I don't think I've ever seen it go up. So really too bad. They're expanding their reach globally, and they're selling a lot of their products. It's just got to take hold. It's just that simple. Visa absolutely was on fire today. So great entry on Visa. It's one of those companies. It's a Dow component that I've always liked to just buy and hold. Fabulous company. But obviously had a wonderful day today, up I think $20 a share or something just today. So a nice little boost there on the bottom end. Like I said, today was a nice day, kind of a salvage day. Maybe you'd think I could be a little happier being up 7,500. Not really. It's been years since I've looked at the stock market, and these are some of the intangibles you can take away from my discipline. In that, what would you do if you made $7,500 in a day? Yay, you'd jump up and down, and this is awesome. This is for the inexperienced investors, but you go through so many days, an equal amount of down days. You just hope that over time, the goods outweigh the bads in the range of 10%, and you're good to go. Live to fight another day. VIG, my passive base here, dividend appreciation fund, as well as VPU with the utilities. So looking nice. Apple, obviously, just an absolutely dominant quarter. Absolutely dominant. Top and bottom line beat. I don't know how the hell they do it. It is just absolutely phenomenal. I sold my 75 shares up at the 170 mark, about a month and a half ago anyway. Picked up 25 back into Apple. So just kind of reestablished kind of a token position there in Apple. It's a big position, mind you, and I'm glad I did because I always want to have a piece of Apple in the portfolio, but I felt like it had run pretty good from the low 100s up to the 170 mark and liquidated a pretty awesome profit there. So 95% stock and holding on to that 5% cash in here. Something to mention here. I did add back in 50 shares of ExxonMobil. Royal Dutch Shell is doing quite well. So oil rolled off today with the rotation in the market, but no problem there. We'll continue to own it. This was a big surprise to me. Big surprise. And this is where I was going to take some strategic fund ups. Now, if the market's rolled off 10%, this would be a place where I would look to kind of do a strategic buy up. And maybe a couple thousand is prudent here. I didn't have a chance to do it, but I was pleasantly surprised that this is holding up nicely. It was up week over week, go figure. I have no idea how. I have no idea. But I declare these numbers to you as they are. This is a cool way of investing with M1 Finance. Had a really great discussion with Chris. Christopher Blaine is part of my Viper group, and he's also a good friend of mine through the channel. But we were having a good discussion about M1 Finance, and I don't know how else to put this. I roll these out through the channel, and this is not for everybody, but it could be. It's a very nice way of grabbing the 11 sectors in the S&P. Your technology, your healthcare, your financials, all the way down the line, your utilities, materials, energy, telecoms, and just investing in the whole market, but dividing the allocation across the 11 sectors and weighting it in the way that makes sense for you. For me, I've got technology on the high end. So even with technology rolling off, this portfolio is really, really hung in there nicely. And I was pleasantly surprised when I checked this. I thought that this was going to be down. With the 10% roll off, this is pretty amazing that this is held in for a while. The next one I want to foot stomp as well. And I don't mean to come across like I'm tooting my own horn here. This was somewhat experimental, but this is up week over week as well. M1 Finance, man. I've got these funding with about $50 every 2 weeks or so. Dividends pay almost every day when you own 79 stocks. Now, mind you, some of these dividends are 3, 4, 5, 6, at times $9, $10, $12 at a time. But man alive, what a little machine this is. And I'm super stoked on this. I think we need to be open to the idea of alternative ways of seeking exposure to the market using some of these platforms. The tried and true way when I started investing was to lump all your money into 4 mutual funds, and that was it. I think the times are changing. I think with this volatility, of course, you've got these financial planners that are crawling out from behind their rocks, telling everybody how awesome they are and that they need to crawl to them, or people need to crawl to them right now. The secret in investing is that there's nobody out there that's immune to what's going on right now in the market. I, as an individual independent investor, am down just the same as everybody else. Okay. Now, if you're investing with a financial planner, you're also paying the fees on top of that. So, congratulations. You're the one taking all the risk, and they're the one still making money, whether or not the market is up or down. Super important. If you've never heard that spiel from me, play it back on the replay and try to understand and ground truth for yourself what I'm talking about. This is a cool way of investing. Here, this is the bond account. This is attached to that account. So kind of cool. TSP, we're down a couple bits here. Nothing crazy. This is setting up nicely for a nice run into 2022 if we're going to have one. The PIP has fallen off to 23%. I didn't change that. I do apologize. But we're down a bit. Nothing crazy. I do fund this pretty aggressively. This gets funded with about $1,000 a month. That's aggressive for me. Some of you guys are like, you're small peanuts, Ryan. You're missing the point. The point is I actively DCA my accounts, and that's the takeaway. That's more productive than me coming on and saying, I fell on tilt, I shit my pants and I sold everything. You need to do the same too. And oh, by the way, subscribe to my channel. If there's something that I say that you don't like, you can unsubscribe to my channel and go do something else productive with your time. It's no sweat off my sack. I have no problem with that. Zero. Honestly, this is my 60 minutes that I come on and I lay out the goods for you guys. It's just that simple. And I'm always trying to keep the end user in mind. What do people need to hear? Do people need to hear after 3 weeks of stock market action, after 10 years of a bull market, that all of a sudden the sky is falling and everything is going to zero? Do people really need to hear that? Like I said, I think some of these guys could shit on a plate and show you guys, not you guys, but the grander YouTube audience, because I think there's a lot of people out there with a severe disease called followership. I just think it's rampant. And I think for some dumb reason, I don't know what you need to do. I don't know. Punch yourself in the face a few times. I don't know. Smash your head against the wall a few times to wake up and smell the coffee and realize that the only one who cares about you is you. The only one. Okay? That's it. You know, I'm going to give you my best shot. I'm going to give you my best shot about what works in the market. But I tell you what, man, I've kind of come to the realization over social media that there's a lot of people out there that just don't want to hear that stuff. They don't. They do not want to hear that stuff. They just want to hear how they can do it quick and how they can get there without paying as much attention or putting any type of personal attention to a specific program. It's just not going to happen for you. It's just that simple. There's no substitute. You want to know where the greatest secret lies for me in my success story as a financial wealth builder? It's my effing job. You want to know how to succeed in life? Go get an effing job. Find something that makes you happy and get a job. You people who are relying on the stock market as your sole wealth building plan, you guys are setting yourselves up for a lifetime of stress and discontent. Honestly, the stock market is not built for that type of activity. If it went up every day, and it went up every month, and it went up every year, this is so wonderful. Jack, you don't have to know anything about this. Just get involved and it'll make you money. And oh, by the way, you can retire at 30. As stupid as that sounds, people actually do buy into that. In that I can be the one. I can be the one that grabs the stock market in such a way that it does what I tell it to do. Now it's going to go up and it's going to go down, man. The idea is to control your plan over the long term, man. Take the goods with the bads and live to fight another day. All right. Find something else to do with your time that is conducive to the four categories that I'm going to talk about here at the end of the live stream. That's really going to help you guys, give you the pedigree that you need to like I said all the time, man, be proud of being an independent investor. There's no doubt about it. You're saving money. The ETFs that I own, yes, are going down, but they cost me nothing to own. This sector portfolio that I showed you, cost basis 0.10. That's the cost basis. Okay. 0.1%. It doesn't get any better. I don't pay anybody for that. I've never touched this. The only thing I do is fund this. That's all I do. I've never rotated money. I've never sold a thing. It takes zero. I foot stomp, zero effort to maintain this account. Anybody can do it. It's very, very simple. And I just told you week over week, after a lot of people are, starting to get the prepper bunkers all set up and ready to rock, I'm up. I'm up. This is a nice little way of seeking exposure to the market. It's pretty cool. Vanguard's growth is up just a little bit. Recovery today a little bit in the Amazon, Google, Facebook, NVIDIAs of the world. So nice to see that. It seems like I've got a little bit of footing after today. How we're going to enter into next week is beyond me. Okay. VO, which is your mid cap offering here with Webull. Kind of cool. I bought it. I'm in it. It's good. Globex has kind of just slowly degraded a little bit. I'm kind of waiting to have this catch some fire this year, probably middle of this year when they uplist to the NASDAQ, which is the plan. Okay. Really cool. I'm very excited about the prospects of this company. We'll see. Cryptocurrency has caught just a little bit of footing here. It's been on an absolute sell-off. It's been a bloodbath in crypto. It's followed the broader stock market as well. But that's where we are there. And then the total portfolio value, 465,780. Okay. So, if I look at it in the acute short sense, perhaps maybe I should just be completely disappointed, maybe stress myself out, maybe turn into a skeleton like my my thumbnail, like I'm doing so bad that somehow that I need people to feel sorry for me. I don't understand that application, man. I never will. I'm trying to help you have some perspective about this deal and just understand that I've asked for this digital number, to ask like a digital number because it's invested in the stock market in the capacity that I wanted. I want it allocated to risk. Now, part of that 465, 780 is comprised of some cash. And I did over the last 3 months raise some cash. 2021, I went all the way through and did not do a whole lot of big chunk buying. I did a lot of saving to cash. I did a lot of just holding the stock market true. And here I am in a position where I've raised some capital. I'm ready to deploy, but I'm very, very acute in monitoring the markets to make sure that I get the best entry that I can. It's just that simple. And we'll continue to monitor the markets, and we'll keep that dry powder on the side until we're ready to take some strategic buy-ups in the market. I could have done it today. I could have done it last week. I could do it next week. It's not a problem. It's not timing the market. It's just looking at the market objectively and saying, we're off 10. It's that simple. Should I buy now? Sure. Don't go whole hog. Buy with some scale, buy a little bit. If it continues down, no problem. If it goes back up, great, you're a winner. If it goes down, you buy, you're a winner. Win in both markets. That's what this game is all about. And in my evaluation of the group here, how many people actually panicked and sold? If you're one of those people, no problem. I'm not here to judge you, but you are doing it wrong. Okay. That is the wrong application. If you sold in January, if you held, great. If you were had enough conviction to buy, good on you. Now you're doing it right. If you're selling in January here because of this activity, you're doing it wrong. Okay. The further the market goes down, the more I want to buy. And that's the attitude that you got to take into financial markets when we're looking to do this stuff. All right. Let's cruise down to the bottom here, get to some of the folks. There's the first one, Mad Cow King. How did you come up with that? Really? Jeez Louise, man. When the market is volatile, don't invest your lunch money. Well, as true as that is, I think the people that I put my message to from a pointed perspective are those people that don't invest at all, right? And I think the old ownage that Mad Cow King has addressed for the group is enter into the market with scale. You don't have to put the entire farm on black. You don't have to put huge positions into the stock market all at the same time, man. It's all good. Start at dollar cost averaging. You don't have to do lump sum investing at all, to be honest with you. You just invest your little bits every month on schedule, do a little strategic buying, raise to cash, do some investing. Hell, do it all. It's all good, baby. It's all good. You can do it all if you don't look at the market and say, I don't make a lot of money, therefore I can't do it. Instead of, I don't make a lot of money, but I'm going to do it. And I'm going to do it with $25 every couple of weeks, $25 every, $50 every month, whatever it is that you decide to do. It's just, we want to get people from not wanting to invest or thinking that there are barriers to entry, past those barriers, and believing in themselves that they can absolutely do it, and they can absolutely. So friendly view, that's a good one. Those who sold were misinformed. I put the culpability on both sides of the house. I cannot blame Meet Kevin. I cannot blame Jeremy with financial education. I cannot blame Graham Stephan for coming out and just really seriously taking a dump on a plate and showing it to people, and people watch that stuff. Now, I guess they're good channels. I don't know. I spend my time not glorifying people in that capacity. Whereas I think a lot of people feel really, really good when they're part of such a big community. I think they feel good, I guess, for some dumb reason. I don't know. I'm not like that. I go to the gym every single morning at 5 o'clock, and you want to know how many people are in there with me? Zero. You want to know the successful traits of successful people? Identify what it is right in this world and just do that. You don't need validation from other people, man. It's all good. Just make it happen on your own. It's some of the toughest things you'll ever do. I look at some of these categories of success, and I used to look at diet and fitness, and I'm like, gosh, man, I love to eat. I love it. But if you can just chip away at these topics a little bit, diet and fitness has nothing to do with the stock market. Or does it? Does it allow you to look at things more holistically and kind of buy into a little bit more of a holistic program. In my opinion, it makes me a much better stock applicator if I'm healthy, or if I do end up making something out of this Hyliion investment. Maybe I'll be around, with a few marbles upstairs to enjoy some of this money, or at least watch my kids enjoy it, because I'll probably give it to them anyway. Unless you needed the money to support your family, it was not a sell all correction. No doubt about that. Totally agree with that. Appreciate your comments. Friendly view in the house, man. Very cool. I wish I could kick over and start anointing some wrenches tonight. Need more moderators. Need more moderators in this independent community, man. I usually give everybody a moderator. I don't care. But anyway, got Kenny. It's great to see you, Kenny, man. Your thumbnail looks like an Iron Maiden album. It's amazing. Yeah. It kind of speaks to my whole, like, I try to capture what it is I think is the thesis of the markets. And it's like, none of that's true. It's just the stock market, you know? It's a cool thing. Stock market's cool, but people talk like it's some sort of, like, it's alive, or it's like it's I heard a comment and it was aimed at me. It was by one of my friends through YouTube, another channel creator. The stock market's trying to shake people out. I, I don't know what that means, man. The stock market is what it is. It's not alive, okay? It just is what it is. And to take it for what it is, I try to look at it that way, like people really stress out about this stuff, and it's just not the right application. And the trick for you is to say, gosh, Ryan, I don't want to lose my money either. I've got $10,000 to invest, or $1,000. Should I just take that and just invest it all right now? If you're concerned about the money, then take 10% of it. Take 10%. Start with $100. Start with $1,000, and get yourself off the launching pad and start that DCA program. Simple, simple, simple as can be. Start with VOO. Start with the S&P 500. It's one fund. It's a low-cost ETF. It'll cost you 0.03 of expense. Good to go. Invest in the S&P 500. Very, very simple. Something anybody could do. All right. Very cool. Yep, that's it. Got that. Cash is good to have. Got my good friend Eric Weber. Cash is good to have as well. It's just one of my strategic buckets. It's one of the things that I talk about here that's different in my application, because I know as an independent investor, I'm going to save money over the long term. I don't have to get so over my skis that I'm going after the cost savings and I'm going to over lever to the market, guys. I'm not a wealthy man. Like, I just told you what I have in my total comprehensive portfolio. What do you expect that I can do with that? What would you expect that I'm planning on doing with that? You know, I can buy a modest house in Virginia Beach, a nice house, $500,000. That's a lot of money, but it's not aligned anywhere close with what I want out of life. I've got some more work to do. Okay. I have some perspective about this thing. And my thing is, I have said this many times, I don't trust the stock market. I don't trust it. Okay. To keep some savings capital on the side there, to keep some other strategic buckets the way I do, to have my money allocated the way I do, some in passive, some in dividend growth stocks, that just makes sense for me. And I think I mentioned Strongman with Chris, and I like him a lot. I really do. I actually find myself questioning, do I watch his channel because he foot stomps the VT all the time, which is what a lot of investors need to hear. But I think it's somewhat of a one-sided perspective, in that the market doesn't allow you to have just you do this for forever and for all time, and it will work. That's not how the market works. The market demands of you to put strategies in play, and sometimes there's going to be times where some of those strategies aren't performing as well as they could, and then there's going to be other times when they are performing and kind of holding that portfolio afloat. But the VT or the VTI or the VOO, man, when the market rolls off, they will suffer. Passive investments will suffer. They really will. And I like my more holistic approach to the market, in that during those times, it's so nice to have that value where it's paying in form of the dividends. I really like that stuff. All right. Very cool stuff. Fantastic. I got another friendly view comment. Very cool. Everybody who owns assets is down. Yep. If you were fortunate to weather the storm, you're going to do well. If you weathered this storm, I tip my hat to you, and I thank you for bringing that up, friendly view. That's a really good point. I say all the time that there is no lesson that is more important than being an investor in the market. These lessons that you will learn so much about yourself. Be honest with yourself. Did you like waking up every morning and seeing that the market's down 500 or 600 points? Did you like it? Did you not like it? Did you deal with it better than you thought you would or could? Right? Give yourself credit where credit is due. And as you start to tack on these months, it's going to build up your risk tolerance. Your risk tolerance is like a muscle. You have to exercise it. And the only way that you exercise it is to be involved in financial markets. It's just that simple. I thought you just needed to buy the dip. Why not? Certainly. Call it what you want. People say you can't time the market. I just look at it objectively and say, look, the market's down 10. Could it go down 20? Yes. Could it go up 10 from now for the rest of the year and have another banner year in the S&P 500? Yes. So it's kind of futile to say, if you entered now, you would be, in fact, buying the dip. That's a good thing. If you bought back in December, you would have suffered through this dip. So it's just a realistic application that I apply with no real guarantee of certainty of the outcome. In other words, I'm prepared for both. It's either going to do one of two things. Okay. It's not going to enter into this like fifth dimensional galaxy and do something other than go up or down. The stock market is going to do one of two things, up or down. It's that simple. Predicting either one of those two outcomes at any given time in the acute is impossible. You cannot do it. You cannot do it. And people argue with me on that all the time. And then there's people who, for the sake of being really, really sexy and coming on and being like, the Fed chair said this, and therefore it means this in the market, and I'm doing this, and therefore you have to do it. It just doesn't exist. Sorry. I'm not sorry, actually. I'm right. I'm not sorry. I'm right. This is what people need to hear. They need to hear this stuff. They do. If your game is to get involved only to be subject to the whims and influences of others, then don't start. Don't start in the first place, man. It's just that simple. Awesome comment. Thank you for that, Steve B. Steve B's in the house, man. Fantastic. Tell him, Ryan. Fantastic. It's there are no facts in the market. That's the funny thing that people come on and they act like they know exactly what's going on. I think I'm probably closer to the truth by telling the people who frequent the independent investor channel to not expect that you're going to know those outcomes. People, I think, put themselves on an expectation, and this is the excuse I hear. I don't know anything about financial markets, therefore I can't succeed. Nobody knows squat about financial markets. I know a lot about fundamental analysis on companies. I know a thing or two to be dangerous about technicals as well. I've studied financial markets and I've studied market momentum my whole life. And I'm still confident enough to come in front of a YouTube audience and tell you that I still don't know. I don't know enough to predict markets. Nobody does. Nobody does. Okay. But I do know enough to provide transparency through what it is that I do and have shared with you some of the philosophies that have made sense for me and have obviously worked. I didn't earn 465,000 in hard dollars in my life. Hell no. I've probably contributed 120 to that. And the rest is capital gains. That's the power of the stock market. So when you look at a testimonial like mine and you're like, wow, that's pretty cool, that there is power, then the question comes, do you want to invest or do you not? It's just that simple. And I'm trying to advocate for those retail investors that I was pretty hard on at the top of the live stream. I do think there's a lot of people out there that just need to be kicked in the head. They do. They need to smash their face against the wall a few times to wake up and understand that this thing has to be kept in check. It has to be kept with some level of perspective and scale. If you're over levered to the market, and this would have told you perhaps maybe if you're over levered, if you have, $50,000 to your name, you have zero in savings, you overspend, you don't have enough paycheck to paycheck, and all of that 50,000 is tied up in the market, maybe you can handle it, maybe you can't. And I think maybe now is the time to be honest with yourself about what you can and can't realistically expect from the stock market. But don't just throw in the towel and give up. That's not going to work. All right. Starbucks is looking really good right now. Fantastic. Yes, it is. I think I bought more after it's and Michael Babcock went on a shopping spree today. Michael, it's good to see you, man. You bought some serious stock today. Very good. Javier is in the house. Is that you, Javier? The young man who's frequenting my YouTube channel at 15 years old? I need to probably come out with a clean version. This is not made for kids, guys. But if that's you, Javier, and you are an adult, smell a copy and purchase Starbucks. No doubt about it. Starbucks is a buy all the time. It's a good company. It's well run. Margins are great on coffee. It's a good business to be in. I like it. I do own it myself in the dividend portfolio. I stuck it in there. I like it. It's a good one, man. It's good stuff. Yeah, sorry about that. I apologize if you're sitting with the family. My bad. But it's what I felt at the time, so I decided to say it. This is not a Netflix channel. You know that, Jamie. You're getting about as unique a content as you can possibly get on my channel. Proper, it's great to see you, my friend. Very good stuff. Just going up the line here, getting everybody some FaceTime. Eric's in the house. Have to slice an apple in that M1. Yep, absolutely. Apple's a good holding, man. It's good stuff. And Matt Simmons is in the group here. I got money back below that. What's up, Ryan fam? Finally, some green today, holding steady as usual. Stay the course. It's been real tough on me. I'm taking a double decker. The portfolio wouldn't have suffered as much had I not had Hyliion in there. Hyliion has been a real drag in the portfolio, and it's drugged down a lot of my conviction. I'm very convicted on my program from a value investing perspective, and Hyliion, it was one of those step away from my discipline, and I've just been punished for it. There has not been one single iota of positive from owning the stock. Company, totally fine. The disconnect could not be any more rampant. And I'll continue to foot stomp the message until I find a reason to not. And I'm not even close. I'm just not even close. I'm more excited now, having gone through what I've gone through with Hyliion over the last 18 months, than if you were to tell me what I was in store for a year ago. I would have been like, damn, I got to go through that. I don't know if foresight would have provided me that. I would have been like, you know what? No, thank you. And not because I knew the stock was going to go down, but because of the mental anguish, that you go through as an active investor in a company that you have to continually cover. I continually cover the company. I'm scouring the landscape for information. It does not help when a CEO is basically just slammed the door on people and stop talking. I don't know what's going on. And that's really what pisses me off more than anything. But I have to believe that the silence is for good reason, to protect the IP that's going on. And we just need to give it more time. It's just that simple. I feel like I'm right. I will continue to be wrong until I'm proven right. It's just that simple. And even right now, as much courage as it takes for me to come on and say that I have been wrong on this stock, I have a conviction like no tomorrow that I will be proven right on this opportunity. I really do. People really need to rethink how they think of creating mechanical energy from the internal combustion engine that we've done over the last 100 years to ship goods. You don't need that. All you need is an onboard generator filled by either a natural gas or a fuel agnostic type of application, or hydrogen fuel cell. And these companies' technologies are really advancing this idea into the transportation industry. And like I said, it's going to be a lot of fun. I do have stake in it. So it'll be a lot of fun to see how this industry really provides these solutions and we get them into the hands of these fleets. David, I really appreciate the dialogue this week, man. There's a few people. Rick Schnellman is also in the group here. David, you're also one of them. I really appreciate your candid discussion with me, man. I tell you what, I sure as hell wear my heart on my sleeve. no doubt about it. And if I could have thought for a second that, my conviction on a stock would have taken everybody into this toilet bowl with me, I would have avoided it at all costs. I really would have. But this makes sense for me. This is advanced level stuff. I've thrown a lot of bullets at this sucker. And like I said, perhaps maybe it's just we need to uh, deploy our always available option of holding and applying more time. It's just that simple. And that's where we are. SoFi has great news and goes down. I don't get it. A provisional bank charter means that they are available or have the opportunity to loan money at the rate, the interest rate that they're allowed to, and from the lending rate and what they get from the Fed government as a bank that's chartered, that's all pure profit. Like I said, I just think in this market, the market's it's just malicious. And I don't care how good of a company you are right now, you're just getting crushed. It's just that simple. And it's been pretty tough, to have conviction on a company and just to see it go down every day. The SoFi's right there. I think options is holding SoFi back. Could be. Can't time the market and can't figure out any of this sometimes. And that's two of us. And it's really tough. I mean, it's just tough markets right now. Is there a light at the end of the tunnel? Yeah, there always is, but where that light is, Dave, I can't tell you where that's at in the short and medium term. I think long term, we may look back on this time and say, man, I mean that was really dark time, and I'm sure glad we held true on our conviction. There's no doubt about it. Can you explain why banks are down with interest rates going up? I can't. The whole market's down. There are just segments of value that are catching favor. The staples are doing quite well, but the whole market has just been absolutely brutal. And I think the tech sell-off and the rotation that's going on is actually favoring the value stocks right now. And I think financials are just being overlooked, and I think they're being drugged down with the rest of the market. The Visa news in fintech helps a little bit. I think the banks are well positioned. I own JP Morgan, I own Citigroup, I own SoFi, I own Goldman Sachs. They're positioned well. I own Morgan Stanley. I own three Canadian banks: Bank of Nova Scotia, TD, and also Royal Bank of Canada. So I'm positioned well, just the same as you. As a fundamental investor, I'm seeing these companies trade at extremely undervalued costs right now of entry, and I'll continue to just invest alongside my conviction. Sometimes you look at the market and you're like, man, this has to go up. And it's not until 6, 8 months later where that, hey, it has to go up is realized. It's not always just looking at the market and saying, oh, there it is. I looked at it. I thought it should go up and it did. It's just never like that. And I tell you what, I have that with so many stocks to where I look at them and, I look at them a year or two later and it's like, wow, look at that. I wish I would have held the course with it. Go a few more minutes here. We'll just take a look at some of these comments that are coming through. Boeing is another one I like. Boeing I was going to enter into, and I thought I had lost it when it had run up to 230. I may double up Boeing here, and I've only got 10 shares. I may double up Boeing here. That might be a nice move for me to take. All right. About the only thing Jim Cramer has been right about. Very good stuff. Visa had a great day today. 3M on the dip is probably pretty good. All goods in the house. Great to see you. TQQQ, good one. And yes, not for the faint of heart. That's triple levered. That thing goes up and down in a hurry. It really does. It's pretty crazy, but it's great to see you. So many people say Apple is overpriced. That's always been a criticism of Apple as of late. It went through so many years trading at 12. And now in the 20s, people are saying it's overpriced. They're turning in numbers and quarters. That was a quarterly number. You 125 billion, is that right? Beat on the top end, 211 of earnings compared to 189 on the estimate. how is a company that's that predictable so unpredictable, and they blow it out every time? It's just unbelievable. And the question is, do you want to own it or not? You know, I mean, I'm talking to you guys through an Apple computer right now. The products are fantastic. They just work. And it's just that simple. So start to kind of close it down just a little bit here. Hyliion Bitch Fest time. That'll be Sunday. We'll come out with the Bitch Fest. That's a good title of the video. Maybe we'll call it that. Now I try to keep it not that. I really don't. My angst is not that I can't deal with a recessed stock price. It's not that. It's that I feel like during a time where the company could be a little bit more transparent, they are not, and that's too bad. It makes people think, why were they so hyped up on the onset, and now all of a sudden they just kind of went silent on the line. That's the part that's the most frustrating for me. Mm-hmm. Yep. Wax on, wax off. Absolutely. Very good. Kathy Wood, I got the most hate for my ARK ETF videos. Boy, was I right on that one. Mm-hmm. Hate to toot my own horn. I was right on that one. Mm-hmm. Dumpster fire. Those are Meet Kevin fault. Yep, they sure are. They sure are. And Becky loves the sheep. Fantastic. Good stuff, guys. We went a little over time, little bonus time tonight. Just a standard Friday live stream. I was obviously kind of spirited tonight. Really want to make sure and drive it home for people. I don't mean to be offensive. I'm not an offensive person. I'm a very, very nice person. I care. My passion comes through in my message. I just want you to find what it is that you're looking for. I do. Because I'm trying to do the same for me. And I think it's those common threads, man. I talked about it today at work amongst colleagues, people, no matter where they come from, no matter if they came from riches or not, what their background is, what you think your privilege or lack of access to privilege, or whether or not you feel like you've been on a harder road than the next. I don't care what your socioeconomic status is. I don't care what you think that it is. Okay. We don't discriminate on the Independent Investor channel because I try to strike at those common themes for people to gravitate to that make sense for them and their families. Look at this thing more long term. Look at it as a wealth building initiative. Look at it as something that is absolutely accessible to the masses. If I can do it, you can do it too. I talked about in reflection all of the mistakes that I have made. If I could have cleaned out half of the mistakes that I've made, I would have probably been better off for it. But here we are, living to fight another day. We will grow and evolve together. We will build wealth together. There's no doubt about that. The success of the channel is predicated on each and every one of your guys' successes that you're able to build for you and your families going forward. Guys, thank you so much for tuning into the live stream tonight. We'll catch you next Friday again for the fastest 60 minutes on YouTube. No doubt about it. Stay convicted. Stay strong. We'll catch you next Friday, guys. Take it easy.